Good evening, everybody. Hope everybody's having a pleasant fall evening. Tonight we have the great pleasure of having Daniel Sinnig with us, and he's got some very interesting indicators to kind of improve the probabilities of being in the right trade at the right time. So I'm not going to take up any more of his time. Daniel, welcome to the Candlestick Forum. We're anxious to see what you got.
Great. Hi, everyone. Can you hear me? Steve, can you just confirm that you can hear my voice?
Yes,
everybody else can hear? Perfect. Can you see me too, by any chance?
You see me? If
not, it doesn't matter, but that's how I look. Hi, my name is Daniel Sinnig, and it is a great pleasure to be here today and to be able to present to your group, Steve. It's a privilege, really. I enjoyed your presentations for many years now, and I'm honored to be able to present to your group today. The title of today's presentation is Discover the Best Indicator for You. And as you mentioned, Steve, we have developed a suite of indicators, in fact 3 indicators, which we believe get you covered for all market cycles and for all trading styles. And that's exactly what we're going to talk to you today. It's going to be a fully packed webinar, so make sure you're comfortably seated. And let's get started. So this is me again. My name is Daniel Sinnig, and perhaps unlike most other traders, my background is actually in software engineering. That's why I taught software engineering at the university, and I worked many years in big companies in this area. And then out of self-interest, I became a trader because of fascination. I was always fascinated by this topic. And of course, when I started many years ago trading, I made all the mistakes that everybody does in the beginning. I traded too big, I traded too often, I let my losers lose more instead of closing them out. I revenge traded. Everything that could go wrong, I'm sure I've done it. And and I then took a very hard view or look in the mirror, and I realized 2 things. First, man, trading is hard. And secondly, I need help. And as a software engineer, needing help meant I need better indicators and better trading tools. So I got to work. I started programming my own tools. And this is really how our story began. We are the owners of an online store called tradingindicators.com. The URL is at the bottom of the screen. And if you go to this URL, you'll see all kinds of trading indicators, trading software, and so forth for different trading platforms. But what's kind of interesting is that most of the tools in that store have originally been developed for our own needs. That's how it all started. And I had a need personally for a particular trading question or trading problem, so I got to work. I programmed an indicator that will help me in my trading. And only later on, I thought, well, if it helps me, perhaps it will help others as well. And this is really how our online store has been built. Most of the tools in there are developed for our own needs first, and then only later on were made public. When I say we're actually a team. It's not just me, of course. We have a full team of different skill sets. We have traders, we have user interface designers, we have programmers, software engineers in our team. Really, because we're looking at trading as an all-around approach. It's not just enough to find a good algo, for example. It also needs to be packaged right. It needs to be intuitive. It needs to be easy to use, and so forth. We're really passionate about this. We're passionate about indicators that work well, but also look a bit different from the indicators that you're used to. Yeah. All right. So, but enough about us. What am I going to talk about today? And again, as I said, it's a fully packed program. First, I'm going to start off by arguing that knowing your trading style really matters, and trading is personal. And if you trade a style that doesn't suit you, you might run into problems. We're also going to show you to figure out what your trading style is. And for this purpose, we have designed a small questionnaire of 4 questions to help you figure out what kind of trader you really are. Then we're going to look at our 360 degrees trading plan, which will cover all cycles of the market. We're going to look at charts. We're going to see how we can fine-tune our indicators for a particular instrument or time frame. We're going to look at scanning. And of course, at the end, as a thank you for listening to me, we're going to have a great special tonight, which we'll call the Power Bundle Special. All right, so hopefully you're all psyched up. I am. So let me tell you a small story about myself. I started trading roughly 10 years ago, and my trading style has always been that, I like to check out many charts. I analyze really, I don't know, 20, 30, 40 different charts very tediously. And I'm looking for setups where the trend is likely to reverse. So that's always been my style. I don't like to jump on the bandwagon. I like to, go into the opposite. I like to trade when the odds are stacked, when I'm convinced that something may happen and the current trend might reverse. I then use a very tight stop loss because it is oftentimes the trend will not reverse because it's hard to finding these reversal points. But at least when I'm stopped out, I have a relatively small loss, and then I hope that the trend will actually reverse. So that's my trading style. As a consequence of this trading style is that I'm getting stopped out more often than I have a winner. It's just it's hard to find the reversal. But if I do find a reversal, hopefully it will make up for the losses that I incurred. That's my style. That's how I like to trade. Now, I explained this style to my colleague Homa. By the way, she's also with us today, and she's going to man the chat group. Hi, Homa. And so if you have questions, please write them into the chat, and Homa will answer them or bring them to my attention.
Hi,
Anyways,
everyone. Sorry, I was on mute.
Hi.
Hi.
Perfect. Okay. I explained Homa my trading style of going against the trend and how I like to have a very tight stop loss. And Homa tried it out, but soon she realized, oh man, this doesn't suit me. That's not intuitive to me at all. Why would I go against the trend? I'm not comfortable having multiple losses in a row. It doesn't make sense to me. And it went almost that far that Homa completely gave up trading because she was trying out a trading style which was not suiting her personality. It was not intuitive for her to go against the trend. She was not comfortable having multiple losers in a row, although small losers, but still, once in a losing streak, it doesn't feel good. And she didn't have the personality to do this. So why am I saying all this? Well, in essence, everybody has a different trading personality, and it is very important to know what this trading personality is and trade according to it. And this will hopefully set you up for success. Now, we have identified, and I'm sure there are more, but we've identified three core trading personalities. That is a trend trader, more like a Homa, because she likes to go with the trend, follow her intuition. Then there's a person like me, like more a counter trend trader, or there's a mix of the two, which we call the opportunistic trader. And the trading style, what trading style suits you, is directly related to your personality traits. And it's whether you're more intuitive or more analytic, are you more of a risk taker or more conservative, and so forth, right? Your very personality determines what kind of trader you are. But how can we figure this one out? Well, it's not always easy to do an introspection of what kind of person you are, much less what kind of trader you are. This is why we have designed a very small questionnaire of only 4 questions, which will help figuring out what kind of trader you are. So if you don't mind, grab a pen real quick. It's only 4 questions, or perhaps remember your answers, and let's see what kind of trader you are at the end. All right? Okay, so I'm going to go through these 4 questions, and I promise you it's not going to take more than 2 minutes. And hopefully in the end, we can figure out what kind of trader you are. All right, so question number 1. During a poker game, are you comfortable sitting out 10 hands in a row to wait for the one right hand? Answer 1. No, that's too boring. I like to play each hand with my friends. Option 2. Yes, that's what the pros do. Or option 3, it depends on the game and who I'm playing with. All right, please remember your answer. Question 2. When buying a house as an investment, what is most important to you? Option 1, the neighborhood appeal and the livability factor of the house. Option 2, high upside potential of the investment, even if you don't want to live there. Or option 3, I could go either way depending on my current needs. All right, please note down your answer. Third question, you receive a bonus of $5,000. What do you do with it? Option 1, I buy Apple stocks. What could go wrong with the iPhone? Option 2, I invest in my friend's startup. It could be the next big thing. Or option 3, I invest my money wherever the opportunity is. Please note down your answer. And finally, last question, you want to set up a garden on your property. Which approach feels more natural to you? Option 1, purchase mature plants that I buy at a higher cost. Option 2, I purchase seeds, and plant them myself. The plants may grow or I may need to wait until the next season. Option 3, I only buy mature plants which are sold at a good price, and I plant others from seeds myself. All right, so please write down your answer for this last question. Let's score this together. So guess what? If you answered mostly option 1, you are more of a trend following trader. I'll explain why in a bit. If you answered mostly option 2, you're more of a counter trend trader. Or if you answered mostly option 3, you're more of an opportunistic trader. All right. So I mentioned a lot trend following trader, counter trend trader, opportunistic trader, but what does this even mean? What do I mean by trend trading or counter trend trading? Well, let's have a look at an example. What you can see here are 2 charts. In fact, it is both on the top and the bottom the exactly same chart. It's Apple on a daily. Okay, so let's zoom in just a little bit and let's have a look at the upper chart to begin with. What we can see here, like in this triangle here, is a classic trend entry, which occurs when the new trend is clearly established. So how do we know this? Well, we can fairly easily see that the previous trend has been taken over by this uptrend here, which is evident by the fact that we've taken out the previous high here, and we're making new higher lows along the way. So there's a good chance, a good probability that the trend has reversed and an uptrend now has been established, and the downtrend has come to an end. What we see here is a classic trend entry, which typically takes place when there is sufficient evidence that a new trend has been established. So when multiple factors come together. And in fact, what you see also on this chart here is our 1, 2, 3 strike indicator. One of the indicators I'm going to demo it to you today, which is an indicator designed to detect new trends and well-established trends. Okay, now let's have a look at the chart below. As mentioned before, it's exactly the same chart. Again, it's Apple on the daily, same time period. What we can see here is a classic counter trend entry. Counter trend entries typically happen at the... Yes?
Daniel, sorry to interject. I'm looking at Becky, Jim, or Stephen. There's a lot of people in the room, in the chat room, saying that they can't see the screen properly, or the screen is mixed up with other parts of the question. I'm not really quite sure how to answer them.
Oh. Okay. Maybe let me just explain the chart a little bit. So, well, we have an Apple chart on the daily, okay? And for a classic trend entry, we are waiting quite some time until it was evident that a new trend had been established. That was our trend entry. Now, on the lower half, we had the same chart, same period, exactly the same thing, but we had a counter trend entry. And what was interesting here is that the counter trend entry happened much, much earlier than the classic trend entry. It happens at the initial evidence or indication that the previous trend, which was a downtrend, has come to an end and the new uptrend might establish itself. So it happens much earlier at first indications. So the advantage of a counter trend entry is that you're getting in at a much better price because you're getting in much, much earlier. Of course, the disadvantage here would be that, well, if there's so little evidence, or if you're trying to trade at the very initial indices whether the trend might reverse or not, you can also be wrong quite often. This is why for a classic counter trend entry, you want to use a stop loss which is very narrow. Because if you're wrong and the current trend does not reverse, it continues, then you want to get out of this as soon as possible. Yeah. But if you're right and actually a reversal happens, you're in for a very good price. Okay, so Omar, please let me know if this problem occurs, continues to occur. But I'm going back to my slides now. Okay, so as a classic trend trader, you might have a personality like our friend Tami here. So Tami is a classic intuitive trend following trader. She it is important to her that things make sense, that she follows her intuition. Going against the trend, for example, would not make sense to her. Tami likes to jump on the bandwagon with other traders, and if we're on a clear trend, she does not mind to get in later when there's sufficient evidence that we're actually in a trend, even if it means that she's getting in at a higher price. So it's a classic trend following persona. A counter trend persona might be more like this guy here. We've named him Mitch. Mitch is a bit more like me. He likes to look at the screen a lot, like most software engineers, I guess. And he's very analytical. And he likes to trade when the odds are stacked. He wants to get in as early as possible. And if he's right, he's in for a bigger payday. And he's confident. He trusts his analytics that when he's right, it's going to make up for the times where he was not right. And of course, then we have a mix of the two, which we call an opportunistic trader, like Brian here, who trades wherever the opportunity is, whether it's trend entry, counter trend entry, a breakout style entry, it doesn't matter. Wherever he sees opportunity, he takes advantage of it. So basically a mix of these two trading personalities. All right. So to sum up, if you're more of a trend trader, you typically use a wider stop because you're confident that your trend is going to continue, and you're just going to want to give it some more room. So you don't want to get stopped out at a small retracement. Yeah, you're okay with the fact that you might be in at the higher price if it's a long trade, and you're okay with a smaller payday as a result of that. As a counter trend trader, it's basically the opposite. You want to get in when the odds are stacked, when it is at very early indications that a trend may reverse. You're going to use a tight stop. That's it needs to be that way because oftentimes the current trend might actually not reverse and it's going to continue. But if you're right, you're getting in very early at a very good price. And as an opportunistic trader, you take advantage of trend trades, counter trend trades, or even breakout trades in flat markets. And you just look where the opportunities are. Now, we have designed indicators for each of these personality traits: the trend trader, counter trend trader, and the opportunistic trader. And one thing before we look at the indicators is that there's no such thing as a better trading style or a worse one. What's important is that you know what your trading style is and that you choose the right indicator for your trading style. All right, so we've developed 3 indicators for each of these trading styles. And so the first one is called 1, 2, 3 strike, and it's a classic trend indicator. And will signal you an entry signal when the trend has been clearly established. And the indicator looks at 3 dimensions for this: directionality, volume, and volatility. And if all 3 dimensions come together, an entry signal will be given. Right? Now, the second indicator is for counter trend trading. It's an indicator that we termed Divergence Cloud, because it has this nice cloud glow, which I'll show you on the chart in just a bit. And it predicts trend reversals. And for this, we have developed or programmed a proprietary form of what we call Volatility Divergence, which happens to be fairly good at predicting these reversals. And I'm going to show you this indicator as well. And the third indicator is what we call the Volatility Crusher. It's an indicator designed to trade breakouts from range-bound markets. At the bottom here, you see an example of these breakouts. So we had a range here, for example. Eventually we break out, and when other factors come together, we place a trade. Similar here for the short side, we had a range-bound market. The range is broken through, this time to the short side, and the trade was placed. How exactly these indicators work, I will show you with live charts in just a bit. All right, so these are our 3 indicators, and we bundled them up and we call them the Power Bundle 360. Why 360? Well, because they cover what we believe most of the market cycles that we have. They cover trending markets, fading market, which might reverse, and sideways markets, which may break out. So for each market phase, you have 1 indicator that gets you covered. All right? And we've summarized these indicators in a bundle, which we call the Power Bundle 360, similar to our trading 360-degree trading plan. All these indicators are equipped with something brand new, and we're very proud of it. It's called IET technology. And just bear with me for a couple of minutes, and I'll explain to you what that means. Okay, so enough talking, just one remark. These indicators are available for various platforms, such as TradingView, NinjaTrader, TOS, MetaTrader 4 and 5, MorphiWave, and TradeStation. Now, before we look at live charts, I'm gonna point out that I cannot demo these indicators on each of these platforms. So I'm gonna demo them on MorphiWave, TradingView, and Thinkorswim. But they work similarly on the other platforms. You just have to take my word for it. Okay, so enough theory. Let's look at some charts. And I'm gonna open up my MorphiWave platform. And while I do this, Homa, are there any questions so far?
Actually, no, most of the questions have been about the screen issues, and I think Jim and Becky are dealing with that, so we're good.
Good, perfect. Okay. All right, excellent. So this slide or this chart may look familiar. It's exactly the same example I've shown you previously, which contrasts a trend entry with a counter trend entry. Shit, this is not true. Oops, I actually had to restart my computer to make the webinar work, so that now you see the same example as previously before. Up here we have a classic trend entry, which happens when evidence is very high that a new trend has been established, in this case an uptrend. Down here you see a classic counter trend entry, as mentioned before. Now, the indicators that we've used to detect these entries. Up here we have what we call the 1, 2, 3 strike indicator, and it detects these trend entries. New entries are signaled by this up arrow here for an uptrend, or a red down arrow. Okay? The little white arrows that you see here, these are partial exits suggestions or recommendations. So this indicator only suggests to you when to get into the trade, but also when to take profits. So in this case, you would enter at this point here, and you take partial profit at this point, here, here, and so forth, until you're finally flat. The number of partial profits that you'd like to take can be set via the parameters, and I will show you this in a second as well. Conversely, for a short entry, you have this big red arrow here, which signals a short entry, and again the white arrows signal partial profit taking until eventually you are flat. Okay. Everything in this indicator can be customized. So if I go to the settings here, you see various parameters to adjust the logic for the indicator. As mentioned before, the 1, 2, 3 strike indicator determines trend by looking at 3 dimensions. Directionality, it's determined by a fast MA versus a slower MA. So when the fast MA is above the slower one, or directionality-wise, an uptrend, and vice versa, and a short trend. We also look for a spike in volume and increased volatility. And if these 3 factors come together, an entry will be shown. You can customize the number of partial exits that you'd like to take with these parameters. All right, and of course, everything in the styling can be customized as well. Colors, lines, height lines, and so forth. Okay, so that's 1, 2, 3 strike. Down here we have our reversal indicator, which we call the Divergence Cloud. And there's a reason for this name. So we predict reversals by looking for divergences. A divergence occurs if price, for example here, does one thing, it goes down, but the underlying indicator signals the opposite. That's the divergence. In this case, we're using a form of volatility divergence. The volatility contradicts price movement. We have a divergence. The divergence are visually indicated by these glowing clouds around the price charts. So red cloud signals bearish divergence, and the greenish cloud, as we see here, signals bullish divergence. And if everything comes together, we issue a signal. For example here, at the onset of having bullish divergence, an entry signal is generated. And again, similarly to our 1, 2, 3 strike indicator, we indicate also when to get out of the trade. First target here, second, third, and so forth. All right. Same for the short side. Here we have a short entry signal and 3, or in this case 4 partial profit taking until eventually we are flat. Of course, just like with the other indicator, everything can be customized. That is the logic, the underlying logic, such as the look back period for determining divergence, the price move that is required. As I said before, price must do something, and then the indicator must indicate the opposite. But if price is fairly flat, like here, it might go slightly going up, but it's not sufficient. So we require a certain degree of price move in ATR%. So price must be going down or up to a certain degree to flag a divergence. Because if it's just flat or sideways, the signals are usually not very good. So we have this additional parameter in our Divergence Cloud indicator. And of course also the lines here can be customized as well. All right, now back to the slides. I'm going to speak about the other indicator in a second, but I'd like to point something out here. How do we know that the signals generated by the indicator are actually any good? I mean, we could look at the chart, we can perhaps judge by this very small subset of the chart, well, this looks pretty good, this seems to be a winner, this seems to look good, and so forth. But do we really know, based on these 4 or 5 trades on this chart, whether this actually is a coincidence or is it sustainable? We really don't know. We would have to guess. Now, we developed something to take the guessing out of this, which is called IET. IET stands for Instant Efficiency Technology. And every of our indicators including these two here, have IET built in. So let me now go ahead and enable IET. So I'm gonna go to the settings, and I disable it on purpose, so I have a little bit of a motivation to show it to you. You go to display, and here you have a whole section on trade statistics. Instant efficiency statistics is disabled right now. We're going to enable it. You see what will happen. So I enable it, and now you have this little box here on the, in this case, the left-hand corner, but this can be also customized, and it will show you how well this indicator is tuned into this chart. And you can see here that we have a long efficiency of 72% and the short efficiency of 50%. What does efficiency mean? That's basically the ratio of winners versus losers. It does not take into account the size of the winner or the losers. We didn't want to do a full back test here. And it's also not related to the profitability, but it gives you an indication how well the signals are working in terms of predicting what the indicator is meant to be. Okay, so this is the statistics for 1 to 3 strike, and all of our indicators have this IET built in. Now, if I change the parameters of my indicator, look what happens to the statistics here. So let me just go ahead and maybe change a little bit the volatility period. You see this? They update on the fly, 82%, 52%, and so forth. So this is a very fast way for you to first of all understand, well, does this indicator work on this chart and time frame at all? Because there's some, I have to be honest, there are some symbols where it doesn't work properly. And then it's important to not trade that symbol, because there's evidence that, well, for some reason, whatever it is, this indicator does not work as well for the symbol. Or sometimes it works well for the long side, but not at all for the short side. Again, that's an indication to you, perhaps only consider the long signals of this indicator. Or in some cases it works just fine in both directions, and you can use the IET to fine-tune the parameters for your indicator. So you see here, as I move things around, the statistics will update in real time, and you can very quickly find the best parameters for your indicator. Of course, right now I'm just playing around aimlessly, but if you do this systematically, you can fairly quickly find good settings for your indicator. Or sometimes you will not. That's important to know too, because then you do not want to trade this indicator and you stay out of the market. Sometimes staying out of the market is the best trade advice to be given anyways. Of course,
Daniel,
lots of things for IT. Yes.
Daniel, I have a question here. So Mike wants to know, how do the arrows in the upper chart align with the fuzzy clouds in the bottom chart? So the divergence cloud.
Oh, they don't align. They're complete. Oh, oops, I deleted it. 1 second.
Do you want me to reread it?
Talk about. No, I understood.
Okay.
The arrows do not align because both indicators are completely different, based on completely different logic. So 1 to 3 strike is our trend indicator, whereas the divergence cloud is more of a counter trend indicator, based on completely different logic. So you would not expect an alignment because they're based on different approaches for trading. But both can be profitable and both can be tuned in with our IET technology. So even also Divergence Cloud down here, if I go to signals, allows us to enable IET. So I enabled it here. Click update. In this case, it just shows up here, but this can be customized. Actually, let me just go back one more time and put it on the top left corner here. All right, so it's here now. And again, you can see here the statistics for the Divergence Cloud indicator, including the look back period from when these statistics were calculated. In this case, it's a daily chart from 2016 onwards. Right? Okay, so this is IET, something that we developed to help you fine-tune the parameters for your indicator and to understand how well the indicator is working for a given chart or time frame. Okay, so let's look at some other charts if you don't mind. I prepared a couple of them for you just to mix it up a little bit. All right, so let me switch over and actually let's start with Bitcoin. These are actually the Bitcoin futures, and we have applied the 1, 2, 3 strike indicator. So let me go and enable IET as well. All right. Okay, and we can see here, this is a daily chart, and Bitcoin is known to be very volatile, and if it trends hard. So it sounds like the right candidate for our 1, 2, 3 strike indicator, which is a trend following indicator. And as you can see here on IIT, the signals are fairly convincing at 94 and 80% efficiency. Yeah. All right. Well, actually it changed a little bit because I scrolled back and more data was loaded, but still, as you can see here, the efficiencies are still fairly convincing for Bitcoin. Yeah? And this is evident also just by looking at the chart and the signals that we have here. Of course, with IET, we can even try to improve these statistics, well, by playing around with the parameters. And of course, every of our indicators comes with some instructional videos on what these settings actually do and mean. Yeah. All right. Perfect. So this is a 1, 2, 3 strike on a symbol, Bitcoin, which is known to trend quite strongly. Let's switch over. Let's look at Apple, and this time a shorter time frame. Apple on an intraday chart, the 5-minute chart, and this time we look at our Divergence Cloud indicator. And again, I have to enable IET. All right, enabled. You see these statistics here. And of course, this is a 5-minute chart, so our look back period is much shorter contrasted to the daily chart. Here we start looking at the statistics from 17th of August 2021. But as you can see here, still fairly convincing statistics. Let me just scroll back just a little bit. Now we still sometimes on this platform you have to scroll back a little bit to make IET load enough data for this look back period. So now it's loaded, and you can see the statistics right here. But of course, with IET, you are in a position to fine tune this further. So if I go here and, for example, change the ATR period to something else, you see how IET updates very quickly. Right. Perfect. Yeah. And it's you have to play around a little bit to find the best settings for a given symbol or time frame. But at least IET takes away some of the guessing that would be required to figure out what that indicator actually works or not. All right. Now, finally, an indicator which I have not spoken about yet, and there's a reason for it because it's actually my favorite. And people say the best for the rest. So this is my favorite indicator. It's called the Volatility Crusher because it just gives, in my opinion, very strong signals. This is the Volatility Crusher, and let me explain to you a little bit how this indicator works. All right. So it is meant to detect breakouts from fairly sideways markets. For example, here. And let me explain to you the calculation a little bit so you get an appreciation of what this indicator actually does. All right. So for this, we are going to start at this bottom part of the indicator. It's mainly for you to understand the logic of it a little bit. For trading, you only need the upper part. But of course, our indicator comes with both these sections. So our this indicator looks for volatility breaks out. That is price moves which are accompanied by abnormally high volatility. And when I say abnormally high, I should point out this is all relative. For some symbols, a high volatility means one thing, whereas for another one, it means something else. So this indicator is smart enough to detect this, and it will detect abnormally high volatility relative to the symbol and time frame at question. How does it do it? Let's have a look at this indicator at the bottom here, and pay attention to these the purple line, which is fairly zigzaggy here. That's the current volatility, and it's not smooth at all. It's like up and down. It's really the current volatility. So one thing we do, we smooth out the volatility by applying a moving average of some sort around it. That's the yellow line here. That's basically our average volatility. Based on our average volatility, we calculate two standard deviation bands based on this average one, which are the bands here, the greenish bands or bluish bands, to the upside and the downside. And then we observe whenever our current volatility breaks above the upper standard deviation band of our smooth volatility. And this is a precondition for a signal to be generated, as you can see here. So here we broke above and we have a signal. It doesn't always happen because there's some other conditions which are required too, such as increased volume and some other ones. But if all our conditions come together, we have a signal. So in this case, a signal to the upside, or again, in this case, we again had a breakout above the upper band. It always needs to be the upper band. We do not consider the lower band because we want increased volatility. Again, here we had a breakout. Also, our other conditions came in, and in this case, we had a short signal. All right, so that's a bit of the theory, how this indicator works. And now, why do I like this indicator so much? Because it gives very strong and very high probability signals. It's really my favorite. So let me turn on IET real quick. Oops, wrong setting. Display, I switch on IET. All right, look at these, and I have to scroll back a little bit to load a little bit more data to it. But look at these values here, 72% long efficiency, 88% short efficiency. This is applied to the S&P E-minis on a 2-minute chart. Actually, this is not what I wanted. On a 1-minute chart. As you can see, also on a 2-minute chart, the values were pretty convincing. So it gives you a very high probability that our targets are hit. So here we had a winner. This was not a winner, a loser, a winner. These are our two profit targets. Winner, winner, winner. So it's just very accurate. So you have it feels good to trade with this indicator because you have so many winners. Of course, if you have a loser, it's because our profit targets are fairly near. It will wipe out some of your profits, but nonetheless, this kind of we back tested this. At this kind of rate, you get a fairly convincing indicator, and you can fine tune it. So let me do something. So remember we require a breakout above the upper standard deviation band. We have quite a few trades here, but we can be even more selective. Let's go to our settings and change the standard deviation multiple for this upper band from 1.5, let's say, to 2.5. So you notice two things. First of all, this upper blue band will move higher up, therefore make it harder for the current volatility to break above it. And the second thing you'll notice, we're going to have much fewer trades. So let me do this. I click, oops, okay. You see the band is much higher, and our chart has much fewer trades. And this is actually my favorite setting. It only went back to 1.5 because I restarted my computer. But yeah, look at this. So quite convincing. This is our Volatility Crusher. Just, it's my favorite. Yeah, anyways, I'm just saying. So, but of course it is in the end up to you which one you prefer, but this is my opinion about the Volatility Crusher. And it gives very convincing success rates. And
Daniel,
we've tried
Jim,
this out on multiples. Yes? Yeah?
sorry, I guess there's a lag there. Daniel, Jim wants to know, are these live charts?
Yeah, it's not, well, it is a fairly live chart. This is, let me just see. Yep, September 16, yeah, that's a live chart.
Is it possible to zoom in a little bit more? Some folks are having trouble seeing.
Move this out a bit. Hang on.
I know we had a bit of trouble with the screen as well, so.
Yeah. So let me maybe explain to you a bit how it works. So here, for example, you have an entry. Every entry comes with two targets, profit target 1 and profit target 2. And we have a stop loss as well. Initially, it's I think at around 78% of this box here, which is our breakout box. And then we trail the stop loss. This is this dotted line here. Of course, like with everything, everything can be adjusted. For example, how far the target should be away. So if you want to make the stop a bit closer, you can see here it just moves up automatically. And the statistics will update on the fly as well. One thing which is also important to note is we have another parameter here which is called require volume. As I said before, we not only need a breakout above this band here, other factors need to come together as well. One of them can be volume, and if you switch this flag on, require volume, and typically it's actually better to have it on. Again, my computer was reset because I had to restart. If it's switched on, you actually get even better rates at 80 and 83% success rate, because it's just one extra thing that needs to come together to flag a signal. What's also cool about this indicator is it doesn't give you too many signals. So depending on the settings, this is a 1 minute chart, you typically get like 1 or 2 entries per day per symbol, which I think it's decent. You don't want to overtrade. It's very selective, but if you're in a trade, there's a high chance that you will have that you will hit your targets. This indicator also works.
Yes. Okay, actually what we're suggesting is maybe turn off your video because some folks are having trouble with bandwidth. So Jim suggested that perhaps that might help out. So that's one thing. And the other thing Ray's asking is, okay, I'll let you do that first. Sorry guys about all these bandwidth issues. We've actually haven't experienced it before, so I'm not sure what the troubles are. Hopefully the recording, you'll be able to catch up all on the recording. Daniel, we can't hear you anymore. Are you there?
Hello? Can you hear me again?
Okay. Yes, now I can hear you. Okay, perfect.
Oh, it seemed like when I turned off my webcam, also my microphone was turned off. Okay. What I wanted to mention, guys, is that this indicator also works quite well on tick charts. But if you apply it to tick charts, what's important is that you switch off the require volume parameter. Why is that? Well, because on tick charts, every single bar has the same volume. So you're not going to see any change there. But if you require a change in volume, you're not going to get any signals. So if I switch it off, as you can see here, our signals come back. So this is something to note. Also, if you apply this indicator to any symbol which does not come with volume for whatever reason, maybe a forex symbol or an index, you need to switch off the require volume parameter, because obviously we're not going to see any change in volume. All right, so so far the indicators. Let me quickly go back to the slides, and what I wanted to point out is that all our indicators are scannable. So instead of having to flip through charts manually looking for signals, you can simply scan for it. Let the scanner do the work for you. And of course, scanning must be supported by the trading platform, and currently it is supported by Thinkorswim, NinjaTrader, ModifWave, and TradeStation. TradingView, MetaTrader 4 and 5 currently do not have scanners, and therefore, of course, we can scan with them. But if you have any of these platforms, you can also scan for entry signals on our platforms. Let me just show you quickly an example in Thinkorswim. So this is Thinkorswim. And for those of you who know TOS, you can go to the Scan tab up here. This will open the scan window, and then we can load one of our predefined scans. For example, if you want to scan for Volatility Crusher entry signals, Volatility Crusher by scan. We can select the scan. In this case, on a daily chart, we can run it. And depending on how many symbols are in your universe, this may take a couple of seconds to complete. And while this is running, Homer, are there any questions?
No, it's actually no questions, surprisingly. All good.
Okay. Well, if you have any questions or if something was not clear because the screen sharing didn't work properly, feel free to ask them right now. And while this is running, just a little bit of a heads up, so I'm going to show how you can scan with it and how you can create your watch list of the scan. And then, yeah, we're going to come to a special offer surrounding our 3 indicators. Okay, so we've scanned through our symbol universe, which are all stocks which are optionable on the daily chart. And now we've picked up how many? 13 stocks. It might be hard to see, but these are 13 stocks which have a volatility crusher signal currently on the daily chart. So then we can simply go to the chart and check these symbols out, or even better perhaps, we can create a watch list based on these scan results. So in TOS this is super easy, and I've already done this here to prepare for it. You can simply go on new watch list and then you base it on a scan query. In this case, the Volatility Crusher by scan. You click OK and the watch list will populate. Okay, so we already have our watch list, and then we can go back to the chart and we can symbol link the watch list with the chart. This goes by this color here. The color is red with the number 1 inside. And if you assign the same color to the chart, where is it? Oh, here we go. It's 2, so I have to say red here. And if these colors match, now the chart and the watch lists are symbol linked. And if I click on ETH here, for example, it will open up the chart, and you can see we do have a buy signal at the last bar. And if I click through this, you'll see it's going to continue like this. So this is a very convenient way to find your signals, and all our indicators are scannable in Thinkorswim and these other platforms which support scanning, and you can very easily flip through the charts which currently have signals this way. All right, and just maybe one last thing to point out, if you have a brand new signal like here, you see right away displayed the 2 targets, but also the stop loss. And you hope, of course, that it will play out. Okay, so back to my slides. We talked about scanning briefly, and to wrap it up, I'd like to point out that in our online store we do have plenty of indicators, including the 3 that we've shown today, but there are many more, including an indicator called the manager, or a super trend, a specialized super trend indicator, and very different ones. And I invite you to check out the indicators on our store. They are mostly proprietary, meaning that they are based on our own logic. They're not just conversions of other indicators. They're based on our own research, our own logic, our own optimization, and so forth. And yeah, we use them ourselves, and we package them up in our online store, which is tradingindicators.com. For the 3 indicators which I've shown today, the Divergence Cloud indicator for spotting reversals, the Volatility Crusher for breakouts, my personal favorite, and the 1, 2, 3 strike indicator for trend entries. And we package them up into a bundle which we call the Power Bundle 360. And as a big thank you for listening to me tonight, despite all the technical difficulties. We'd like to offer you a 20% discount on our Power Bundle, and you can take advantage of this discount until September 20th, and it's going to expire. And this is a limited time offer for these 3 indicators as part of the bundle. Hopefully, it will cover your needs as a trader. And yeah. Last but not least, we are growing. So our online store is constantly evolving. We're trying well, we have a following, and we're trying to extend our following, and we're very excited for everyone who joins our trading community, and it's completely free. Simply go to our website, tradingindicators.com, and you'll see a pop-up on the homepage, which is the first time you're there. You can sign in to become a member, or simply go to the join menu item to sign in to our community. And as a thank you, every member of our community will receive a 10% discount of all our offerings across the board. Power bundle, no power bundle, other indicators, you will get 10% off. All right, so are there any questions?
Actually, surprisingly, no questions. I have put the links into chat for everybody if you guys want to check it out. And I think we're good. Thanks, Daniel.
Perfect. Yeah, I apologize for the technical difficulties. Hopefully the recording will be just spot on. And if you couldn't hear or see everything, please check out the recording. And if you have questions or any feedback or something was not clear, feel free to drop me a line. Again, this can be done through our homepage, tradingindicators.com/contact. There's also a menu item for this, of course. And yeah, one last reminder, we do have this 20% discount. And all you need to do actually is to put this discount code, forgot to mention this, during checkout. So it's called bundle. So click on the product, and if you enter bundle during checkout, there will be a form field for this. The 20% discount will be automatically applied to the price. All right. So thank you so much for listening. I hope you have a great evening. And Steve, do you want to say something at the end, or?
No, thank you very much, Daniel, and sorry about the technical problems. This is kind of a Webinauto problem every now and then. But if you couldn't see the session, watch the recording, because what this boils down to is anything that you can add to your trading or your trading arsenal that's going to improve the probabilities of being in a correct trade. I mean, it's well worth the money. So take a look at the products. These are indicators that have high probability results. And again, anything that can improve your probabilities, the better off you're going to be. So Daniel, sorry about the technical problems, but hopefully everybody will get a good clean recording and hopefully get back with you. So with that,
Thank you. Thanks,
everybody.
Steve. Thanks, everyone.
Yeah, everybody have a good evening. We will see you bright and early in the chat rooms.
Bye-bye.